Jason Riha is an insurance representative with Country Financial, and he specializes in insuring properties, vehicles, and businesses in Illinois, Indiana, and Wisconsin. And Jason has been with Country Financial for a little under 3 years, and prior to this, he owned and still owns his own risk management consulting business, and also spent more than 15 years in the transportation industry specializing in risk management. Jason has been happily married for almost 17 years, has 2 teenage daughters, and lives in Oak Forest, Illinois. Jason was a member of the Oak Forest Rotary Club for about 2 years, but had to step away due to scheduling conflicts. He still participates in all the club blood drives and keeps in touch with many of the members, and hopes to be able to rejoin them sometime in the future. As part of the Romeoville Rotary Speaking Series, speaking on the common pitfalls to watch out for in property and casualty insurance, please make welcome Jason Riha.
So what I'm going to get into today is kind of easy stuff. Easy for me anyway. Stuff you guys probably overlook every day because auto insurance, I don't know if I'll have time to get into home, but auto insurance, quite frankly, it's kind of boring. You buy what you think you need or what your agent tells you you need, and you put it away and you pay your bill every month and kind of forget about it. I'm going to start with a quick story. A year ago, October, my family was in a car accident. So my wife, my 2 daughters, and I'm telling you the story because I'm going to refer back to it a lot as I go through this. So my wife is attempting to make a left turn through 2 oncoming lanes. One of the drivers is stopped and says, "Sure, go ahead." The other lane had someone coming really fast. So my 2 daughters got hit hard. And so she's turning left, and the car came on and got them really good. All the airbags in the car went off. It was ugly. The other car was totaled. So they had so much damage to the front end, it wasn't even repairable. We went straight from there. Nobody took an ambulance, thankfully, but we went straight from there for my daughters to get x-rays because they were feeling kind of goofy. They weren't sure what was wrong, but, and they were shaken up too. So it was a scary event. I wasn't there, but I zoomed over there as quick as I could. And the first thing I'll get into is when an accident happens and your loved ones or people you care about are involved, the first key thing is don't say anything. This one was clearly my wife's fault. She got the ticket. She feels terrible about it. At the same time, she knew not to say anything. You don't admit anything. You don't say anything. You just kind of keep quiet and let the police do their jobs. So let's get into the insurance side of things here. My wife and my family, as an extension, was liable for that accident. So any injuries to the people in that other car, it was a husband and his 2 sons. So good chance of injury there. We got so lucky. There were no injuries. But this very top part I have highlighted is where our liability protection comes in. So we have $250,000 of liability per person. So of those 3 people, if they had to go to the hospital, God forbid one of them was permanently injured, the insurance company is going to pay up to $250,000 per person in my situation, and a maximum of $500,000 for the entire accident. So the reason I'm telling you guys this is the state minimum is $25,000, $50,000. An ambulance ride is $2,000 at least. So at the very least, if you own a home, if you have any assets of any sort, the liability coverage I have on here is really the minimum you guys should be considering. You'll also see their property damage. That is the damage to someone else's property that we are liable for. In this case, this piece paid for the other person's car. Like I said, it was unfixable. It would have cost more to fix it than the car was worth, so they totaled it out. Any questions so far? Okay, next, very important in this situation, medical payments. Most people don't know they have this built into their car insurance. Many car insurance agents will undercut this to keep the price down which is actually doing you a disservice because this part of the coverage is so inexpensive. When my girls had to go get x-rays, it was paid for 100% by country out of the medical expense area. No deductible, it doesn't affect your pricing. The difference between $50,000, $25,000, and $1,000 is a couple dollars a year. It's amazing the difference. So instead of worrying about my health insurance deductible, insurance company paid the whole thing. Didn't need to worry about any of it. And it did not affect our pricing. The medical piece does not affect your pricing. Next, am I going too fast? You guys getting this? Good. Next up is the deductible. So in our case, we were at fault. We had to pay the first $1,000 towards the other person's car getting totaled. So my opinion on this, and I will never tell someone what deductible to get, but to me a 1,000 deductible makes sense. If something really bad happens, you want to have a deductible that you can pay for. But as we all know, if you file an insurance claim, your prices are going to go up. So if you pick a higher deductible, you save money, so you get cheaper pricing, and you're really only going to use it if you really, really have to. I see people submit claims for $100, $200, and it just makes no sense to me because sure, they'll get that reimbursement for the mirror that got damaged. Their price is going to go up by at least double that at their next renewal. So just something to think about there. How am I doing on time?
Fine.
Good, good. So I am going to get into some home insurance here. If you would, grab one, pass it down. So what we're looking at here is my home insurance. It'll be coming to you guys soon. So you guys know where I live now. Very first line is my liability coverage. I have $500,000 of liability coverage. It's not just liability on my home property. It's personal liability for everyone who lives in my house with me. So, I'll give you a weird example that hopefully never happens. I'm golfing one day and I run somebody over in my golf cart. Could happen, right? Greg and I have been golfing. So, I run somebody over in my golf cart. They sue me. My homeowner's personal liability coverage protects me from that. I have $500,000 worth of protection versus taking it on my own. The next one is medical payments. This is guest medical. Somebody comes to your house, they trip, they fall down the stairs. This is just like the auto side. This is money available for you to send them on an ambulance, to help them get a cast, whatever they need. And again, it doesn't count against you as far as pricing goes, and there is no deductible for it. Next one is my pet peeve. This is my dwelling coverage on my home. This is the four walls, the roof, the foundation, the structure of the home. According to my home valuation tool, if my house burned to the ground tomorrow, it would take $282,000 plus to rebuild it from the ground up. I get a lot of people who don't understand the difference between rebuilding a house and the market value of the house. So my house, for example, market value is about $230,000. I'm insuring it for $50,000 more than that. I'm not insuring it for what the realtor says it's worth. I'm insuring it for what it would cost to build it at today's cost for labor and materials. Make sense? Okay, so when you guys are really, really bored, take a look at your home insurance and make sure, do you have enough coverage? Because you hear about people who want the cheapest price but don't necessarily insure their homes correctly, and if something bad happens, they won't have enough money to actually rebuild it. I'm going to skip ahead here to, you guys can see almost towards the bottom, sump pump, water backup, sewer drain. That's a fun one. You guys with me?
Yep.
All right. So, nobody's eating. Your water, any water fixture in your house can back up. So we're talking about sump pumps, we're talking about toilets, sinks. This is protection for that. If there's a power outage and you don't have a generator, say the power's out for 2 days, things are gonna start backing up, things are gonna get ugly. So this is coverage for that. It's not flood insurance, that's completely separate. But this is an area none of us really wanna deal with, so I'd rather have the insurance company clean up the mess than me. And the very last thing, which I didn't put on here, I did. Right above what we just talked about, additional living expense, and this is where I'll leave it. Additional living expense is something that is built into all home insurance policies. This is if your home becomes unlivable because of a covered loss. So a tornado, a fire, something major where your house just, you can't live in the home for a while it's being rebuilt. This is money to go live elsewhere. Hotel, go rent a place, something like that. So if you have a large family, it's important that you have enough coverage for that. So in my case, I'd have $56,000 to go live somewhere else, wife, 2 daughters, while we figure out what we're doing and get the home rebuilt. So that's it for me. Any questions?
So on the sewer backup, if you just had regular insurance, it would not cover that?
That's correct. That's correct. And it's, you know, you don't find a lot of people in condos or apartments who buy the coverage, but people with basements,
Mhm.
especially in flood-prone areas, very important.
Now, do all insurance companies offer that, or if you're in a bad area, you're liable to not be able to get that insurance?
As far as I know, everyone offers it, but if you're in an area that's known for floods, I can almost guarantee you the pricing will be higher. Like you hear about Cook County, pricing is pretty rough. Apparently, Cook County is known for flooding. Some mortgage lenders will require you to have it, that and/or flood insurance.
I got a question.
Raise
The
your hand.
last 2 items,
Sure.
like new roof discount.
Yes.
I know that came in effect this year, I think,
How do you know that?
because I got country
That's
companies.
great. Yes. I'm not here to sell anything, so I wasn't even gonna bring it up. So if your
So-
roof is 9 years or newer, you get a roof discount. The largest discount is 13%, and that's for a brand new roof.
Okay, once
So every year, the discount gets a little bit lower.
And what's this last item? The property deductible waiver.
Oh, that's a good one. Again, I'm not here to sell anything, but about 5 years ago, my whole neighborhood in Oak Forest got demolished by a hailstorm. So everybody, my neighborhood looks great. Brand new roofs all over the place. So hailstorm hit did about 25 grand in damage on my house, between the roof, the siding, the deck, all that stuff, and about 5,000 on my car, because I park it in the driveway. This property deductible waiver made it so I only had to pay one deductible. So I paid the home deductible, didn't have to worry about the car versus home and car. So for $10 a year, good investment.
Good.
Anybody else?
Uninsured motorists, that's where the other guy doesn't have insurance.
Yes.
Or underinsured, he doesn't have enough insurance.
He doesn't have enough, that is exactly right.
So you pay a premium to, what, the insurance company jumps in the shoes of the uninsured or underinsured person to make you whole, is that how that works?
You are a really smart guy, that's exactly right. Nobody understands that.
Don't tell him that, please.
No?
living with him now.
My neighbor, I'll give you a quick story, am I okay?
You're fine.
My neighbor got hit bad by a motorist who had the state minimum with a not very well-known, well-respected company. She had about $600,000 in medical bills. The insurance company for the people that hit her, I think their liability was $25,000. That's where her insurance company kicked in with the rest. She had the same liability coverage I do. So then her insurance company filled the gap between 25 and 250, which still wasn't enough. Get it? So, right, that's important stuff. Anybody else?
So
For the uninsured motorist, does that also cover somebody else driving your car?
Yes, it's the vehicle that's covered.
Okay,
It's a misconception.
okay.
Everyone in my house that drives is listed on my policy, but if I lend it to my sister, who doesn't live with me, she's still, the car is still insured. It's when I give it to her for 6 months,
Okay.
there the problem comes in. The car gets stolen, still insured. It's just, or let's say my daughter was 17 and I tried to hide her because I didn't want to pay for her on my insurance. Then you're walking a fine line. So would the car be insured? Yes, but the insurance company really could come back and say, we're not paying this.
Even if they're not a primary driver?
Yes.
If they
we
have
would-
their own vehicle?
Country, for example, would need proof that they are insured
Somewhere
somewhere.
else,
Yeah. So,
No. Does your insurance cover you when you drive another car, someone else's car?
that would be someone else's insurance.
So therefore, you're,
Whoever owns the
well,
vehicle.
okay, because the insurance follows the vehicle. So even though I may have excellent insurance,
Sure.
I drive somebody else's car,
Yes,
I smash it up, I'm sort of on my own, I
that's
guess.
correct.
Even a rental company's car.
Rental companies are kind of tricky too. If you have full coverage, your coverage goes with you to the rental car, which is great. So when they try and sell you more, you don't have to buy it. However, the one part they do try and sell you, which makes sense, if you're in an accident in that rental car, whether it's your fault or not, and that car is down for a while being repaired, you are liable for paying for the downtime on that car. So when they offer you that insurance on that, so that's one to consider. You guys are hammering me with questions, I'm shocked.
I'm gonna ask the question through you for the rest of the room.
Sure.
If you have a fire, how long does it take you to get back into your home?
How the heck would I know?
How long do you think it takes?
I don't know. If you have a 500 square foot home, it'd probably be quick.
What do you guys?
18 months.
You think?
I was gonna say 8 months to a year.
That'd be my guess.
In Romeoville, it's 11.3.
How do you know that?
Don told me.
Wow.
It also is a situation that only about 1 in 3 of the groups that have fire in the community have anything past 6 months. So we had a fire over on Holden last year. In February, they broke ground yesterday.
Wow, wow.
So you do not have enough in many of the the insurance companies, unless you ask them, do not have the home replacement at code value.
Wow.
It's gonna cost something to build your house, it's gonna cost something else to build it to current code.
Yeah, that is a great point, great point.
So
If you have a
Please check.
100-year-old home.
please check those, we deal with too many people all the time with that.
Great.
When is it appropriate to use an umbrella liability rather than your
Great
liability
question.
against the two?
Your liability protection, your total liability protection should be 2.5 times your assets. What are your assets? Your bank accounts, the equity in your home, retirement accounts. So if you have $200,000 in assets, you want at least $500,000 in maximum liability. If your home is 500 and your auto is 500 for maximum liability, the umbrella technically isn't necessary, but for $200 to $300 a year for $1 million liability, something to think about.
Then, can't you then take your house and down, back down to a lower?
You can.
And then have the umbrella
You
over
can.
top of it?
Like if you guys are working with Craig and he's made you $7 million, you need a huge umbrella. The more you have, the larger umbrella you need. Great story, and I'll end it here. Bruce Jenner was involved when he was.
Wrong name.
Yeah, really, yeah.
He was still Bruce Jenner back when this happened. Man, this is going on YouTube. Anyway, about 2 years ago, he had a pretty major car accident. He was at fault. He has the same liability insurance that I do. He has the same limits I do, but his assets are considerably more than mine. So, and he's a well-known name. He's going to lose some money here versus just insuring himself correctly, paying a little bit, he's gonna pay a lot. So, that's it for me. Thank you, guys.